and we just thought it would bring us more potential international business, Canadian institutional investors, European institutional investors. We're suing the U.S. Attorney General for considering us in violation of the Controlled Substances Act when we're in fact following all of the laws of the states in which we operate in, and which the U.S. government has made a conscious decision to abide by what the state decides. For the last 6 quarters or so, we've really made steady progress across practically all of our financial metrics.
Hi, my name is Jason Raznick, the CEO of Benzinga, and welcome to the Raz Report. As always, before we kick things off, I want to quickly tell you about what Benzinga is. Before I started Benzinga in 2010, there were very few places to get real-time information on financial markets. I thought it was unfair that Wall Street had access to this information before the average Joe investor. So I created Benzinga to level the playing field for you, the retail investor. Benzinga is for the people and by the people. Now, let's dive into the show. Welcome to this week's edition of the Raz Report. We have Executive Chairman of TerrAscend's, Jason Wild. This guy has been regarded as one of the top minds in the cannabis space. He got in early. I think he's a Badger alumni, Wisconsin. I like that because I went to Michigan and Michigan beats down in Wisconsin. My brother-in-law went to Wisconsin. My sister went to Wisconsin. So there's some commonalities there, but Wisconsin versus Michigan is always a fun rivalry. So that's fun. But you started out and built a career. I think you were a pharmacist way back when, and got in the cannabis space early. And, some of the smartest minds in the industry regard you as one of the smartest minds in the industry. So thank you for coming on the Raz Report. We're going to talk cannabis. We're going to talk TerrAscend. But what's new with you, Jason Wild?
Hey, nice to see you, Jay. Everything's good. Everything's good.
Yeah, I mean, I TerrAscend, I see. Oh, by the way, I'm an investor in TerrAscend in the public markets. I don't have any secret shares or anything like that. There's no promotion or any of that shit. I buy shares on my brokerage account and small investor. But so TerrAscend's numbers, and maybe I'm biased, seem like growing great. Like 90 million in Q3, 34% year over year growth, and sequential growth. I think over 20%. Like, what's fueling this growth, or tell us more about that?
Yeah, absolutely. Well, first of all, thank you for your support as a shareholder. That means a lot, especially when you're out there paying for it with your after-tax dollars. It's appreciated. I think for the last 6 quarters or so, we've really made steady progress across practically all of our financial metrics, and just positioning ourselves for where we are now. We paid down about 40 or 50% of our debt over the last 16 months or so, reduced our interest expense significantly, right-sized the business, took out around $14 million in operating expenses, improved our gross margins, listed on the TSX in July, and also we were able to sort of swoop into Maryland and get to the 4 dispensary max like hours before, or within hours of rec starting on July 1st. So that was really nice and additive to the rest of our business, which grew nicely as well, sort of Q2 to Q3. And what I'm most proud of there is that the Maryland acquisitions and operationalizing them, we were really able to show the benefit of the scale of running that state out of our same Northeast headquarters in Pennsylvania, where Q2 to Q3 our expenses went down by $1 million on an absolute basis, while our revenues went up 24% sequentially, and that led to really nice cash flow and good good margins, good. I think we checked the boxes on all the right metrics in the last quarter.
You were cash flow positive in that quarter.
Yeah, by about $9 and change million.
Yeah, and there's a lot you said there, so there's a lot to unpack. And first, I just want to start with the TSX. What does it mean to be listed on the TSX Exchange?
So we just felt like it would offer more volume. We thought it might solve the custody issues in the U.S., where a lot of the prime brokers were not custodying these U.S. operators. And we just thought it would bring us more potential international business, Canadian institutional investors, European institutional investors, And now we're about 4 or 5 months post us listing, and our volume is up significantly. Although volume is up for the sector as well because of the rescheduling news, the news of the letter that went from the HHS to the DEA. We can come back to that. That's driven more volume in the space, but our volume was up, I think, well over 100% even before that news came out, just in terms of us switching from the CSC to the bigger Toronto Stock Exchange.
Okay. And this podcast is the Raz Report. It's pretty casual. So when I don't know something, I'm okay to sound dumb. You mentioned the prime brokers in the U.S. may not custodying these companies. So what's that mean? So if I buy shares on E-Trade of TerrAscend, the prime brokers or the market makers like a Citadel or an Apex, they don't get involved in that stock. Is that what that means? I just curious.
Yeah, the prime brokers typically are that's like the central repository of all trades for hedge funds, mainly. So they were not allowing. It's like the big firms, like
Okay, Morgan
Goldman
Stanley. I got it.
Sachs,
Got it.
Morgan Stanley, those firms. They've got they do all the prime services for the different funds. So a lot of them stopped allowing custody, or they would not allow companies, or they wouldn't allow funds to invest in primary share issuances. They would let them buy it on the open market, but sometimes they wouldn't let them invest directly in it because they looked at that as like helping perpetuate crime or something like that. So that's what happened there. In terms of individual investors, some of the brokers allowed it and some of them didn't. One of the big pain points that came to the space, or big sources of pain, was when Pershing about 2+ years ago, who they clear like a huge amount of the trades across the U.S. They're owned by Bank of New York, and they decided that they were going to stop custodying U.S. cannabis shares. So that caused a lot of pain. It was that first plunge, between early 21 into 22, that exacerbated it. But all of these firms, it looks like at this point, it looks like these firms are allowing custody of TerrAscend. We haven't heard. We saw several in the first few days after we listed. We saw that several of them sent out notices saying that they removed TerrAscend from their blocked security lists pursuant to their MRB or marijuana related business policy. Yeah.
The TSX version of it.
Yes.
Okay. What about Pershing?
Yeah. Everybody's custodying it now.
Okay. Well, because here's an analogy I was going to go with. So Bitcoin has taken off a bit. As they're talking about the ETFs could become legal, and just in general, Bitcoin has taken off. I had Kathy Wood on from ARK Invest about 3 months ago when Bitcoin was like at 18 or 19K, and now it's like at 43. And everything she said is what happened. It's literally like almost like seeing a psychic on our show, and it's
Wow.
crazy. It was crazy. I actually bought shares after she was on our show. I won't buy like ahead. I bought like the week after, and
Yeah.
wished I bought more. It was up 60%. But what I was going to say to you is, so with the ETFs become potentially, Bitcoin becoming legal, what I'm getting at is for the cannabis space, if, these other firms, providing custody, provide more liquidity to the market, as long as or I guess I'll even bring this analogy into it. Royal
Yeah.
Caribbean, Carnival Cruise Line, Norwegian. I bought those stocks a long time ago, like a year and a half ago, like when it was out of COVID. The stocks didn't move forever. Okay. They did not move.
Yeah.
They sat there. I
Yeah.
bought like Royal Caribbean, Carnival. I ended
Yeah.
up not making money on them, meaning I sold them because I'm like, why aren't these moving? They're
Yeah.
people are booking now. They've gone crazy. Like in the last 3 months, they've gone up. Like if I would have kept them, I would have made 300, 200%, whatever
Yeah.
the percentages.
Yeah. You're
And
too early. You were
I was
early.
too early, and I should have stayed with it and let my thesis play out. Well, I kind of have this little bit thesis in the cannabis space, and you can tell me if I'm wrong. So,
Yeah.
cannabis stocks, have not performed the way
They've
investors would want.
sucked.
There you
They've been
go.
horrible.
They've
Yeah.
they've been horrible. So the question I have is the market eventually going to come and find them if the companies can perform? I mean, we'll get to the rescheduling to it. We'll get to the taxes and stuff like that. But Do you think this is like one of these Royal Caribbeans and Carnival Cruise Line moments where it's time, so to speak?
Yeah, it's just a matter of time, you mean,
Yeah, like
until the
because like
market fixes
to
it down?
discover them, like the Royal
Yeah,
Caribbean Carnival, people just I didn't understand why they weren't buying the stocks. It made no sense to me. And with your number, I get it if the company's not performing. So you had
yeah,
9 million of cash flow. Your
yeah,
revenue grew by 34% year over year. Now we'll
yeah,
get into what TerrAscend does and why you think it'll grow, etc. But what I'm saying to you is eventually valuations get really cheap and you have
yeah,
cash flow and you could buy, earnings for 5 times earnings or, instead of paying 70 times earnings for Nvidia. You know what I mean?
yeah.
Sorry for the
Absolutely.
long ass question to get to the freaking.
No, I get it. It's perfect. It's perfect. I think I think the thing is that the issue is the taxes. Like that's what's over the last couple of years, investors have focused on the fact that, after taxes, a lot of these companies that claim that they're EBITDA positive are actually, not cash flow positive, largely and because of the taxes and because of the interest. So we did the best we could in terms of like that's why we paid down our debt a lot. But like overall, these companies are not driving significant cash flow where it would make sense for them to buy back their own stock. The potential rescheduling, which I think there's better than a 50% chance that it happens over the next 12 months, and that would or should get rid of the onerous tax treatment. Then you know, uh, if our stock was still where it is and we had an extra 55 million dollars in cash flow or in non-incurred taxes, like I would definitely think that it would be a good investment to take $4 or $5 million a quarter and buy back stock for as long as the market was not recognizing it. But right now, I think that what I would tell you is a huge positive is that all the targets, when we're looking to buy things like what we just bought in Maryland, the targets are so realistic in terms of their expectations that even at our depressed price, the acquisitions pencil out very, very accretively.
Got it. And
Especially, yeah.
well, but no, but and so buying back stock's one thing, and but what you're saying is you'd rather take the free cash flow to pay down debt because debt you could have interest rates of 15-20% on that.
Well, yeah, you would think interest rates are going to go down anyway for cannabis operators if the taxes go away because there'll be such better credits. They'll have so much better cash flow. I mean, these companies will actually have PE ratios because they'll be able to report actual after tax earnings.
So Jason, just so if the average listener is listening to the Raz Report, and we're
Yeah.
with TerrAscend Executive Chairman Jason Wild, the rescheduling, what does that mean? Just explain it. If like you did $1,000 or $1 million in sales, what does the rescheduling mean? Just like compare
Yeah.
yourself to another retailer like I don't know, Walgreens or something.
Yeah, absolutely. So what happens is that cannabis companies can't deduct their operating expenses, their SG&A line. So if a company they pay taxes essentially on their gross profits. So last quarter was awesome for us. We were able to get to 53.6% gross margins, which meant that on roughly $90 million in sales, multiply that by 0.53, that we paid 21% tax on that gross profit. Normally companies get to deduct all of their other expenses. So it came out to
But hold on, do you get to deduct like the salaries and stuff?
no, nothing related to the operations of the business other than the part that goes into the cost of goods.
Hold on. Gross profit, is that another way of saying revenue?
No, revenue, your gross margin. So if our gross margins are
After your cost of
53.6.
after your cost of goods sold.
Great. Well, you got your gross margin first. Say you had 50% gross margin on 90 million. That's $45 million in gross profit. Then we're tagged. Usually, companies can below that they can deduct all of their operating expenses, which are running their businesses. Yeah, everything. In the
Salaries,
cannabis business, you
rent,
can't
rent.
deduct that. You can't
Wow.
deduct that
Why?
rent
Why?
because the federal government says, hey, you owe us, you owe your taxes, but your business is illegitimate, so we're, denying your deductions.
but if they're saying that your business is illegitimate, they would just close up the businesses. Like if there's a what's it called, prostitution place, okay, they would close up the place, okay, they would close up the place, right? That's what the government would do. I'm just saying, they're saying it's illegitimate, but so instead of closing up, they're just saying we're just gonna screw you on taxes.
Yeah, yeah. That's why we hired David Boyce, and we're trying to go to the Supreme Court. We're suing the U.S. Attorney General for considering us in violation of the Controlled Substances Act when we're in fact following all of the laws of the states in which we operate in, and which the U.S. government has made a conscious decision to abide by what the state decides.
So you're paying taxes on profit, and it's not even real profit at some respect because
Gross
you're
profit.
paying. You're
Right.
paying on Aaron Thomas as one of our producers here. You're paying the tax before you pay Aaron Thomas, and so
Yeah.
that I mean that's very
It's
challenging.
unfair.
I know, but like, is there an analogy and historic example of where they did this exact same rule, like for another industry?
Yeah, I think they did it. I've been told that they used this to go after like Al Capone, and they used it to go after certainly like other like cocaine dealers over the last 20, 30, 40 years.
If that changed, that would change your tax structure. You'd have a lot more free cash flow and even if it changed 50%, you would have a lot more free cash flow. And that's like even footing with, yeah. Okay. Got it. So
Yeah. So that would be huge. But the stocks continue to act weekly, pretty weak, and people sort of don't believe it. And I think it's better than a 50% chance. I mean, but
but I think, but part of the argument should be that the prices of cannabis would go down a little bit for customers, right? It would be a net
oh yeah,
benefit for customers too, right?
yeah, benefit for everybody. But and the smaller cannabis businesses, the ones that where they only have retail and aren't vertically integrated, they get hurt the most by the way the tax treatment works on this whole thing. Like it's almost, if you just have retail, it's like almost impossible to have free cash flow after taxes.
So if you just have retail and you're buying from other vendors to supply your store, why is that much more difficult? I think that'd be easier because you'd have less employees.
Because part of the, if you're producing the product, you are allowed to deduct like your growth, what it costs you to make it. You're able to put more of the expenses around your cultivation and manufacturing are part of the gross, the deduction against gross profits.
Because it's okay. That's
I
interesting that they
believe
allow you.
that's why.
Yeah, that's interesting. So are you guys vertically integrated?
Yeah, we're vertically integrated everywhere in every state we are.
Okay. So Tara said you guys have been making acquisitions. Maryland has been amazing. We're going to get to that one in a second. In Michigan, where we're based out of, you bought a company, Gage. I don't know if you bought other ones. How do you
Yeah.
guys see Michigan? Is that still part of your strategy? Is it too saturated here? What's your story in Michigan?
Yeah, Michigan is pretty saturated. It is, what we would call, an adult swim only, state in terms of operating in. But, I think that makes you a better operator because you have to be good. Michigan is very close to the cannabis culture. Our Gage brands, have done very well in our other states like New Jersey. Several of the top SKUs in the state are Gage branded SKUs, and we view Michigan as a place where we have to win because we feel like overall investors aren't going to give us credit for the places where we're like crushing it because the level of competition is not as strong as it is in Michigan. But we always felt like they wouldn't give us credit or a multiple on that because they would say it's all going to turn into what Michigan is. So we have to show that we can make money in Michigan to sort of unlock everything else in my view. And in Michigan, we made huge improvements in terms of gross margin and profitability. When we closed on Michigan, which was like 7 months after we signed the deal, that was like the peak of pain in Michigan, like first half of last year. And I think about a year ago, we had somewhere like a 20% gross margin. It was, our gross margins are very weak, very almost impossible to really make any money if you have a 20% gross margin. And now we're like in the low 40s. So low 40 gross margin, and the awesome thing about Michigan, which is better than states like Maryland and New Jersey, is if you have your model right and you're making money, then you can go out and own 150, 200 dispensaries if the economics worked, because there's no limits in Michigan, and it's a very fragmented market. So, and that's, you could be in the low 40s as opposed to our other states where we're more like in the low 50s. You can be in the low 40s because those other operating expenses are going to be so much lower if they're spread out across 100 stores instead of the max, 4 stores in Maryland and 3 stores in New Jersey.
If someone's listening
Yeah,
and they don't know TerrAscend, again, we're with Jason Wild, Executive Chairman of TerrAscend.
yeah, we are. What I usually say is we're a vertically integrated operator, meaning we have retail, we have cultivation all the way through retail in 5 states. We are more of a narrow. We say we've always said we're deep, not wide. In terms of our footprint is smaller. We've always sort of made it a very high bar to clear in order for us to add another state. And we always felt like that would make it so that we could have more of a focus in the places we operated with our attention and with our capex dollars. So that's what we've done in New Jersey, which is our best market. We're
Number 2 largest operator in New Jersey and closing in on number 1. Is that?
Yeah, we're very. It's very close. It's like it was like $100,000 difference, I think, the last month or the month before. So they're at like 18.9, and we're at 18.8% of
Who's
the
they?
market. It's Verano.
How did you guys do that? How did you guys do so well? And
We just focused. Yeah, we just focused. We knew we didn't have endless dollars to spend, for capex to build out facilities, and we felt like New Jersey was going to be at the time it was a medical. When we applied, it was only a medical market, but we felt like it was going to be one of the states to fall in terms of going rec. And we wanted to. We used to talk about a lot of that. You have to. We wanted to go big early to be like one of the top operators and top capacity, operators from a cultivation perspective in any of these states which were very immature, but were about to undergo a large expansion in their size. So that's what we did in PA. PA hasn't gone rec yet. Hopefully in the next year or so. But New Jersey's worked out awesome, and we just focused on the brands, which I needed to come back to in terms of how I would describe us. We have the top brands, and we are considered amongst the highest quality in most of the states in which we operate. Even in New Jersey, we're not. I don't believe we're number 2 from a unit perspective, but we are from a dollar perspective because we occupy the higher end of the priced SKUs on flower. And we command better pricing than pretty much most of the rest of the industry.
what brands do you have in Jersey?
So we've got the Gage brand, which, as I mentioned, has done very, very well there. We have Cookies in New Jersey. We cultivate and manufacture all the Cookies branded product in New Jersey. We have our original brand, Kind Tree, which has done very well in New Jersey and is also amongst the top rated or the top listed SKUs. I believe we're currently number 1 in flower in the state and number 1 in extracts and all concentrates. So and those are the Kind Tree, the Cookies, and the Gage brands. The other thing is we did now come out with a more value focused brand called Legend, and that has done very well. We sell it in larger packaging. The margins are the same because there's less labor around the packaging. I think they're sold in ounces only, and we really have a good broad base of brands. Another partner brand that we have is Wana, and we have an exclusive with them in Maryland, Pennsylvania, and New Jersey. That's part of what's going to help drive us. We believe the number 1 is the Wana launch because we have our own Valhalla brand, which has done very well, but we found that Wana has not cannibalized it, and it's just especially in Maryland, our cultivation facility is brand new. We weren't in that many stores. Not the same way that we are in New Jersey, but Wana is a great sort of Trojan horse because that's wanted by practically every store in Maryland and has gotten us into most of them by this point.
Wow, that's awesome. That's so I didn't know Juana. I mean, that's so you have the exclusive.
Yeah.
Fellow mutual friend, but fellow noted cannabis investor Todd Harrison is a big fan of TerrAscend too. Um, Todd follows all these companies. Why do you think Todd is a big fan of what you guys are doing?
Well, I see a fan of what we're doing because I think over the last 6 quarters or so, we've done what we've said that we're going to do, and we've pulled off a lot of stuff that people didn't really believe us, especially even the TSX listing. Now other companies are listing. Another MSO just listed last week, and we're happy because I think that the more companies that move over to the TSX, the better for the overall industry, and it's just another step towards getting onto the Nasdaq at some point. But I think that Todd has just seen what we've laid out, what we've done, the improvements that we've made. I mean, this is a really hard business, and especially there's a lot of characters in this industry in terms of especially the legacy people, and you got to. I think in order to not lose touch with the cannabis culture, you have to have some good sort of harmony between the OG people and the suits, so to speak. And I think that Todd has seen that we've been able to navigate that, and it's really been driven largely by in terms of talking about the brands. It's really in cannabis. I think it's like almost less about the brand and more about quality. And if your product is, especially on the flower side, if it's the best product that's on the market, then it could be in an old school Ziploc bag with no brand on it at all, and people would want to buy it. And I think I'm glad Todd has noticed that as well over the years, and he's been a great supporter. But we're still the stock price is still here. Like nothing's gotten better. It's been a little crazy.
Yeah,
Yeah.
so if you want to look up TerrAscend on Benzinga, you can look it up, guys. It's spelled TerrAscend. Okay, so if that's you want to look it up if you don't know it, but I mean, you have a lot of your money, like you have a lot of money on the line here. You're a big
Yeah.
shareholder of TerrAscend. Like the number of shares, it was like kind of mind boggling how much you have in TerrAscend.
Yeah.
Right? I mean, you're
Yeah. I bought them all. Yeah. I paid for them all. Sure. So yeah, we have I don't know, somewhere in the 90-ish million shares of TerrAscend, and I've continued to buy stock here and there, every time we have an open window, because I think the stock has to be worth more 3 years from now or 5 years from now, and hopefully sooner from where it is today. I just know that the underlying business. Like the first day after we made the big investment, we co-invested in TerrAscend at 17 with Canopy Growth. I remember the first day I went and met with the 15-person staff, and I gave them the Warren Buffett quote about, short term, the market is a voting machine, and long term, it's a weighing machine. And the only way any of us are going to get paid is if we build something for the weighing machine, and we got to build a real business. And at this point, I never would have imagined, or I definitely didn't think that we were going to be doing $90 million or just under $90 million in revenue in the quarter with 53% gross margins and 27% EBITDA margins and positive cash flow. So the weighing machine part is really, has been playing out. It hasn't been a straight line for sure. But that's been playing out, pretty well over the last 5 or 6 years. The stock price is it's just there. I've never seen such a sector where it just went down 90%, in practically a straight line. Everybody is very has been burned, and there is a high level. I forgot what there's a whole thing, a cycle or a circle of grief, and I think now we're at maybe the extreme apathy stage where we could be, for the last 6 quarters or so, we've been putting up, I think some impressive quarters and just good strategic moves. And the stock is still, much closer to the lows than anything else. And I think that at some point, it's like the truth always happens. I used to have that on my wall in my old office. Like at some point, it's back to what you were asking earlier. Like we will be able to buy back. It'll be cheaper to buy back our own stock than it would be to go out and buy some other, state level assets to bring into the business. If by chance those taxes go away, then that will make these stocks, all.
Do you hope to replicate the Maryland strategy in other states?
Yeah, absolutely. Absolutely. There's several states that should be going rec over the next few years. Figure Florida, which has a huge population. Ohio is right. Ohio's right next to Michigan. So the same way, we
So Ohio just got
go.
approved for rec, right? So are you guys in that? Like, are you guys working on that?
We're looking. It's not, from what we understand, the program's not going to be rolled out, very soon. Probably have at least 9 months, I would think. So we are looking at several. There's several opportunities out there to enter Ohio, and we can run Ohio and Michigan out of Michigan the same way we run Maryland out of and Jersey out of Pennsylvania, which would be able to help drive much better profitability. And Ohio is going to be a huge state. I mean, there's a lot of people that live in Ohio.
Well, that's what I was going to ask you. You have a pretty big company, so like you Jersey, so you run it out of Pennsylvania. Like, is there like a managing director of like the Jersey region? Like, how do you control?
Yes. Yeah, we and when I say it's run out of Pennsylvania, that's where all like finance is run out of, and where a lot of the people that are sort of the more senior people for the Northeast, they operate out of, marketing people also. But then you have we have a huge facility. We have 150,000 square foot cultivation manufacturing facility, and there are a lot of people that operate out of there, and we have retail out of there. But the way we have it is we have a GM or I think they're a VP of it's the Northeast, and then we have Michigan, and then we have California. So several of the people are sort of in charge of or are working on all of the Northeast, and then we have a head of New Jersey and a head of Jersey cultivation. And retail is run regionally.
Okay, just a couple quick last questions.
Sorry if that was a meandering answer.
No, that's good. I wanted to know how you're running all that stuff.
It's hard. That stuff's hard, by the way. Like that's the stuff that all of these companies, all of the MSOs, like they're doing this stuff all for the first time. A lot of them are trying to integrate, and they have 15 different states, which is like having 15 different countries. But that stuff is hard, like figuring out the org chart. Like I spent a lot of time, and we all spent a lot of time talking about that like a little over 2 years ago. I think we got it right now. Part of it is just having a good CEO. But
Are you happy? Are you happy with your CEO?
He's awesome. He's really good. Yeah.
I know you've been through a couple in the past, or
I was like, almost seen as the guy that nobody, could work with or make happy or something like that. But Ziad's been great. He's been here for just under 2 years.
Got it. Wait, so that's how, that running those things, like you have a lot of revenue coming in, you gotta record it, figure it out, and scale. I mean, that's okay. So here's like some fun questions.
Yeah.
All right. How many unread text messages do you have?
It's got to be thousands.
Is it thousands?
No, I don't know. I can look on I'm on my phone. I'm doing this.
Okay.
This podcast over my phone. I can look. Probably. I'm guessing it's probably like 250.
Okay. Yeah. I mean, so a lot of maybe group threads or people you didn't.
I have a lot. No, I think what I do a lot is like I look at it at the time it comes in. I'm in the middle of doing something else. It's completely like entered my mind and exited. But so it doesn't show up as unread anymore, but it's like practically unread.
I'm there with you. Okay. What is this one you might not have an answer for right now. What is the best piece of advice you've ever received?
Best piece of advice I've ever received is, or it's just one word, patience. Like, it doesn't matter if you think that you could accomplish something or build something, that it's not a matter of whether you can do it or whether you can't do it. It's just a matter sort of how long it takes you to be able to do it. And I don't, to me, I don't care in terms of as it relates to TerrAscend or the fund. Like I plan on doing this for the next 10 years or 20 years or 30 years. So I'm not, I tend to, I think, I applied this in terms of that I'll never like take a quick buck versus, making $3 2 years from now or 3 years from now. And I think that's patience. I just feel like a lot of, at least as I've seen it as I've grown up and gotten older, is, generally it's more when people are younger, they think that they need to like accomplish whatever they want to accomplish in like, in like 6 months, and it could take 6 years, which they would have, I don't know, somehow might have been gotten discouraged along the way, but it could take 6 years and be incredibly successful.
Okay. 3 more quick questions with Executive Chairman of TerrAscend, Jason Wild. What do you do when you feel stressed or discouraged or anxious?
Yes. What do I do?
Stressed, discouraged, or anxious?
No, I do. I try to, I try, like I take on a lot of stuff, and usually I don't get anxious, whereas most of at least my other family members and friends would. So I do keep like, a lot of balls in the air. The way that I deal with anxiety is often I realize that it's because I'm tired. Because when I'm more tired, then I start worrying more about stuff, and I just have more anxiety. And if that's the case, which is usually the case, then I try to take I'll tell my wife that I'm meditating because she does TM, where she meditates twice a day for 20 minutes. I'll tell her I'm meditating, but it's usually 90% taking a quick nap, and then I usually feel better.
Got it. Okay. And what was the most difficult challenge in your life? You don't want to share, you don't have to. Jay Wild.
Mm, mm, mm.
I didn't even get to like how you were an entrepreneur when you were younger. I didn't get to any of that stuff.
Yeah, I would say 08, 09 in terms of my fund going from, peaking over 50 million in AUM. We're up like 50% the prior year. And then we were down like, I don't know, 38, 40% the following year. And between that and redemptions, and we got down to, I think, like 11 million from 50 to 11 in like January of the following year. And at the time, I felt I had never experienced anything like that, and I felt like the world. I would get on the train and Metro North, like leaving the city to go to Westchester, and there were like people that must have worked for Bear Stearns and Lehman, and like the fear I saw in their faces. But I was that was a pretty traumatic time. Paul Volcker called me into his office. He's like 6'9". He was the predecessor to Greenspan. For people who don't know. And he pretty much told me what an idiot I was for not listening to him when he told me in January of '08 that everything was going to go to shit.
How'd you know him?
He was an investor in my fund. One of my other investors referred him, and he was up a bunch of money. But he's one of the guys that I lost. We had pretty much the peak of our redemptions was December 31st of '08. The market didn't bottom until like mid-March of '09, but we were already up on the year by that point. But I lost a lot of good investors at the bottom.
That fund back then invested in just everything, or was it biotech or pharma?
Mostly farm. It was a lot of specialty pharma, but we did a lot of consumer stuff as well. In 08, 09, I got whipped around. There were like different, it's similar to what's happened over the last few years, but there were different, like all the oil and commodity names, they all ran all my stuff imploded in January of '08. Those all peaked in like August of '08. And I sort of like cycled, I sort of experienced a bear market like a couple of times in sequence because I was like a momentum investor and I was buying relative strength. And all it meant was that group had not yet been pummeled. So we took a lot of pain in '08, but we made '09. We were up like 80% or something like that. Like we made all the money back by November, but it feels a lot worse to be down and, and just grasping at what to do, because, losing money every day doesn't, exactly instill a ton of self-confidence. And back then I had, less experience. The fund was open for less than or right around 10 years. And it felt devastating. And like a lot of a lot of conversations with investors that were not fun. I mean, I've dealt with a lot of that in this last round as well, but I feel like I have a little bit more maturity, and I don't get worked up by stuff that investors say, and and I realize that most of it is like their own fear.
Paul Volcker, though, that would have been he's a good guy to know, I guess. That would, but this section would be like how I survived the financial crisis of '08. That's what.
Yeah, right,
Yeah.
exactly.
All right. I think we've asked most of everything. I mean, TerrAscend, it's growing. You guys should watch it. I mean, the numbers, like I said, 90 million in Q3. Those are serious numbers with profitability, cash flow. I am an investor, but it's TerrAscend. We have the executive chairman, Jason Wild, who's been in the space. It's not a Johnny come lately. It's a guy who's been in the space for a long time and knows how these companies work and wants them cash flow positive. His money is where his mouth is. He owns a lot of the shares, and recently bought some more shares, as Benzinga covered. And you get to see him at our events. He comes to the events. He has good investors behind him. And I think TerrAscend's one to watch. Jason, did I miss anything? Did I get everything?
I think you covered it.
All right. Sorry for keeping you so long. We went to 42 minutes. Usually
I could have gone longer.
Yeah,
I could have gone longer.
You could have gone longer. We could have done Joe Rogan type interview, Aaron Thomas. Thomas, he limits me to 45 minutes max and he cuts me out. All right. Thank you, Jason Wild, TerrAscend Executive Chairman, coming on the Raz Report. Thank you.